Good morning, good afternoon, and good evening. We are on day 4 of the World Economic Forum's annual meeting 2024 here in Davos, Switzerland. This is a press conference on the future of global fintech. My name is Naoko Tachibayashi, Communications Lead at the World Economic Forum, and I will be your moderator. Today, I am joined by the distinguished panelists. On my left, I have Vince Iswara, Chief Executive Officer of Dana Indonesia, Indonesian digital wallet. Drew Propson, Head of Technology and Innovation in Financial Services, and one of my dearest colleagues here at the World Economic Forum. Governor John Rwangomba, Governor of the National Bank of Rwanda.
Thank you.
And we have Brian Zhang, Executive Director and co-founder of Cambridge Center for Alternative Finance at Cambridge Judge Business School, University of Cambridge. Welcome to you all. Today, the World Economic Forum, in collaboration with the Cambridge Center for Alternative Finance, launched a report, this one right here, that reveals new data on the state of global fintech, offering insights not only into how the industry is evolving, but also on the impact it has on the traditionally underserved consumers and businesses. Research findings are based on a global survey of over 200 fintech companies across 5 retail-facing industry verticals and 6 regions. The report presents actionable insights to public and private sector decision makers to facilitate further responsible growth of the fintech industry. Now, Brian, let me begin with you. Could you share how this research came about and why is it so important? And what are the key findings that are particularly valuable?
Of course, many thanks, Naoko. A very good morning to everyone in the room and for those who are watching online. So at the Cambridge Center for Alternative Finance, which is a part of a Cambridge Judge Business School, we have had the pleasure of working with the World Economic Forum over the last 5 years to further our collective understanding of technology-enabled financial innovation, its impact on the economy, the wider society, and its interplay with policy, regulatory, and supervisory innovation. During COVID, we worked together with the World Bank Group to undertake a 2 global fintech industry assessment survey, each time working with around 1,400 fintechs across the world. At that time, we found that many fintech industry sectors and verticals saw significant growth during COVID as the digitalization of financial services gathered pace. Now today, there are 2 important questions still remain. One, is the rapid growth of the global fintech industry sustainable? Can the sector strive under more challenging microeconomic and fundraising conditions? In other words, is fintech and the digitalization of financial services through alternative financing instruments, channels, and systems something that is transient or structural? Second important question, can fintech fulfill its promise and potential to widen the access to finance for unbanked and underbanked populations, for small and medium-sized enterprises, and for women entrepreneurs, especially in emerging markets and developing countries? So that is the backdrop against which we carry out this global fintech survey of 227 fintechs with the support of the UK Foreign, Commonwealth, and the Development Office. So for this study, we focused on 5 fintech verticals, and those are digital lending, digital capital raising, digital payments, digital banking and savings, and insurtech, in 6 geographical regions: in Europe, MENA, Sub-Saharan Africa, Latin America and the Caribbean, North America, and the Asia-Pacific region, to really take a pulse of the global fintech industry and to have a glimpse into the future of fintech. So what we have learned from this research, I will focus on highlighting two key findings, and my colleague Drew Popson from the forum will discuss other major takeaways. First, the global fintech industry is demonstrating strength and resilience. Fintechs, after merging from COVID, their performance remains strong, with consumer and customer growth averaging over 50% across industry verticals and regions. And it is also evident from the data, one of the key drivers of that growth is consumer demand, with over 50% of the surveyed fintech citing it as a key supporting factor for growth. Second, that growth perhaps was weighed down by the relatively higher rate of inflation and higher interest rate. And that sentiment is reflected across different regions, with over 56% of the surveyed fintech citing the macroeconomic condition as a key hindering factor for growth, with a further 40% of the surveyed fintechs regard the funding environment as an impediment for growth. So I'm conscious of time, so I'll leave it there. I pass the mic back to Naoko. Thank you very much for your time.
Thank you, Brian. Now let me turn to you, Drew. What additional key findings stand out as being useful for public and private sector stakeholders?
Thank you, Naoko. Brian, great way to open here. And what I want to add to what he said is a finding that I think we will all find a little bit surprising, but very, very exciting. When we surveyed our fintechs, we asked them how they perceive their regulatory environment. And we found out that 63% of the fintechs we surveyed rated their regulatory environment as adequate and appropriate for their platform activities. This is something we absolutely were not expecting. I think we all know that fintechs and regulators have not always had the most loving relationship, but this really demonstrates progress and a lot of effort on both the public and the private sector side to bridge that gap and really have a better communication, better relationship that hopefully will advance fintechs forward. So with this, I will also say that it wasn't necessarily across the board that everybody just loved their regulator. There were some areas where we saw we can certainly make improvements. One of those being in particular, looking at compliance registration and the cost associated with those. So where we asked fintechs to dive a little bit deeper is we said, what are some specific areas within the regulatory environment that would be valuable to get feedback from you on? What they noted was for the registration and compliance, it was about 27% that rated it poorly. So that's something, it just gives us, 28%. So that gives us a little bit of a data point for areas we know that we can improve. The other area, which was 27%, where we saw the rating was quite poor, was where we had multiple regulators working to regulate the fintechs, and the coordination amongst those regulators came out strongly from participants that was something that the coordination was not exactly where it should be. So gives us a place to start if we want to see this continued fintech growth that Brian mentioned, where we can maybe make some improvements. Another positive finding, though, that I think is very much worth noting is that a very significant percent of the customer base as well as transaction values for these fintechs is from traditionally underserved communities or segments of the population. So if we look, for example, just at low-income customers, we know that they make up about 40% of the customer base. If we look at women, also around 40%. And then if we look at the rural population, we see that this is about 30% of the customer base. These numbers are really actually quite significant, and I think demonstrate that financial services, if we're looking at fintech, they can be really great providers of digital financial services for those who maybe previously were unbanked or underbanked. So certainly a nice sign that if we continue this fintech expansion, we'll see some economic dividends as well as some social benefits.
Interesting figures, a lot of them there. Drew, let me just also ask about the region. Now the report breaks down the data by the region. Are there any significant differences depending on which regions?
Yeah, thanks for the question. If we look across regions, there was nothing that really struck us as very striking or something that we found was just very different across the regions. However, we did see nuances, which again can be really helpful for if we're looking for areas of improvement or who to look to for if we're on the lower end of the spectrum for certain ratings. So if I go back to that first statistic, if we look at the regulatory environment and 63% of the fintechs reporting that it was adequate, if we look across regions, and maybe I'll just highlight a couple regions since we have representatives of those regions with us today. If we look at sub-Saharan Africa, that number is actually 66%. So really great to see a little bit above average there. Governor, I'm sure you had a hand in that, so congratulations. And if we're looking at APAC, Asia Pacific, we see that number actually being the highest of the regions. So there we have 70%. So if maybe some of those regions are at the lower end and a little bit below average, it's just a nice indicator for them to know who to look to and to see what is being done in these certain regions, maybe get some ideas that can be adopted to their regions.
Thank you, Drew. Now, Governor, there was a bit of an introduction already by Drew, but you do have a direct window into how fintech can be impactful for individuals and businesses in Rwanda and more broadly, sub-Saharan Africa. Now, could you kindly share with us the experience on this front and also touch upon the challenges you see as a regulator for facilitating healthy fintech growth?
Yeah, thank you, Naiko, and good morning, everyone. Happy to be associated with this press conference around the research that has been done on fintech, and looking forward to reading the findings of the research and borrowing from it to improve what we are doing. Coming back to Rwanda, I'll really focus on Rwanda, which more or less is a good representative of what is happening in sub-Saharan Africa. Fintech has been a key driver of our development as a continent, and I'll touch different aspects that we see benefited from fintech. It has really helped us reflog, for example, financial inclusion and many other aspects concerning populations benefiting and working with the financial sector. Let me start with the point on financial inclusion. In Rwanda, way back in 2008, when we did our first FinScope survey, we had only 21% of the population having formal access to financial services. And the government took a deliberate decision to try and address this challenge. The biggest issue was distance between the branches and where the populations were. The other was, of course, education. So part of the innovations that really helped to address this issue was digital financial services that started kicking up in our country in 2011. Just a simple mathematics there. In 2011, the percentage of digital transactions to our GDP was just 0.3%. Today, we are at 135% digital transaction as a percentage of GDP. But going back to financial inclusion, from that to 21% to the last survey we did in 2020, financial inclusion the form of financial inclusion had moved to 77%. And about 66% of this drive was attributed to digital channels, digital financial services. So already bringing people into the financial sector was a good achievement through embracing digital financial services or fintech as we are discussing here. But beyond just the access, the other key point here is now access to loans that really help people to improve their lives. Today, 77% of personal loans are digital loans. And a big chunk of these borrowers were totally excluded from the financial services. As recent as 2017, most of these digital loans started coming on board around 2018. And today, around 77% of the personal loans are digital loans. The other point is the government has, apart from really promoting digital financial services in the private sector, but is leading by example all government services in Rwanda are moved digital. The application for any service, you do it online. And because now of the digital payment channels, everything is paid online. And this makes life easy, so you do everything at the comfort of your desk, but also the turnaround time it takes used to be a week to get a government service. Today you do it within a few hours, you've received the response. In some of them, in fact, is within a few minutes. The other point maybe I need to mention here that is also key to people's lives is on pension. Before these digital channels, we had one official pension fund that was covering around 570,000 people. And using the digital channels that were available, government introduced an informal pension fund supporting, mobilizing citizens to subscribe for their pension using digital channels. And this has moved from 570 to 3.6 million last year. Just within about 5 years, the number of Rwandans that are now able to save for their late age has removed like 6 or 7 times. What have we done, or what do we do? There's, as I said, there's a lot of initiatives from the government to support fintechs. For example, Rwanda, today we have one of the biggest incubators in Africa, Noscam. This is an investment by an Swedish firm in Kigali that is helping mainly the fintechs. And what we've done as a central bank, we've in 2021, we went beyond our usual mandate of financial stability, and we established a department responsible for financial sector development and financial inclusion. And part of this, there's a specific unit focused on supporting and working with fintech. And our teams go to these incubation centers and engage with the innovators there before they think of coming to apply for licenses. One is to engage for them to be aware of what is expected as you want to play it in public domain, but also hear from them, hear their concerns. We've been really reforming our regulatory regime because this is a new area we are all learning, and we always say we learn by doing. So this close engagement with the innovators has helped us to always modernize our regulation to support the newcomers into the fintech industry. We've also established, of course, a sandbox where we allow these innovators to test their products in live environment, but also having sessions with them on, normally these young tech guys, they come up with a tech solution and they think that's all. We have to take them through the importance of having proper governance structures within your business, assured of capital, and of course these incubation centers helps them to link with financiers as well. So I can say we are doing the second, we've started doing the latest FinScope survey this year, and we expect to see a bigger improvement in the form of financial services, but also the usage of these financial services. Maybe I will stop there. We'll be happy to answer any follow-up question. Thank you.
Thank you, Governor. Thank you for the exciting initiative and the impacts. Now let us turn to Asia, Vince. As CEO of Dana Indonesia, where have you seen fintechs providing value for consumers and businesses, specifically in Indonesia, and what are the challenges and the opportunities that you see there?
Sure, of course. Good morning, everyone. I'm very happy to be here. And thank you, Naoko. We see that there is a very big excitement in regards to this digitalizations, especially in regards to the advance of fintech in Indonesia. More and more people are getting into this digital ecosystem, and the reason being because there's just so many benefits that people can get out of it. essentially, if you are Indonesian, prior to this fintech, what instrument access do you have is just cash or cards, right? And cash is pretty much has been around for a long time, but it's been very expensive for a lot of people. And getting into this financial institution, for example, onboarding the users and everything has been pretty slow compared to what the advancements of the fintech. Some of the benefits of the fintech is the way we see it is it's much more convenient, it's much more secure, and for the users, they have a much better way to track all their expenditure. So that's why for them, it's a much more preferred way as compared to cash. And where we've seen what's happening to the SMEs, especially the businesses, especially for the SMEs, are that it helped them track also their income much better, and the transparency and the ability for them to reduce their operational costs, because if they handling using cash before, it takes them a lot of times at the end of the day to reconcile and settle what they have made during the day. We've seen that most of the SMEs, once they get into this digital ecosystem, on average, their businesses increase by 30%. Some of them, when we did an interview to some of our merchants, some of them, once we educate how to do it properly, can increase up until 900% post of this digitalization. And why is that, right? Because one, now not only they are able to accept more and more of the populations, but the second thing is they have more ability to sell their goods and product through omni-channels. Offline and online, so they'll be able to take advantage and leverage on that. And from the user side, the most important part of having this digital payment is the ability for them to transact to any of the merchants, whether they're online or offline. And because there are now more and more options available, so now it's becoming a cycle of every time there is a every time they transact, they realize that there's an opportunity for them to transact to other places or to other merchants immediately. So we've seen a very good trend on this, and we are happy to see that the growth so far on year basis has been more than 100% for us. So even during the pandemic, the growth has been pretty significant. And post-pandemic and up until, for example, the last year, our growth has surpassed 100% as well. So we've seen this very strong trend to keep continuing, and it is going to help overall the ecosystem.
Can you also, Vince, touch upon the DANA's efforts in consumer education, given that the education was noted in the report as a significant obstacle?
Sure. I think one of the advantage of having this digital app as the main interface from the user point of view is that we can have direct interactions with the users. I think that's the key factor here. So the moment they all started to be onboarded, the moment they started to use our app to engage in this digital payment, one, it's easier now to convert them to other financial services. So for example, we started to give them more and more access into lending, insurance, investment. And the way that we educate is trying to give as much as a lower barrier entry points to start with. For example, like if they started to want to put the money to investment, they can start with as low as $0.01. And then we tell them what is the advantage of putting money in there, how it's going to grow your accounts over time. And then after that, we also started to offer them, it's like you also have the ability to have lending once you're eligible for it. And then with the way the app function is, we can give you at any time when you are ready, then we will give you notifications. We'll give you an entry point for you to do that. And also, because it's such becoming a large community of people, so people tend to also educate each other. And the community is becoming stronger and stronger. And finally, the key here is because now, through this digital payment, we have the ability to recognize the pattern behavior on the payments, and they're becoming basically financially visible. So then more and more of the sophisticated and more of the product or services that they can get through this financial platform can be offered them over time. So overall, we've done very a big effort on how to educate our consumers, and we also work very closely with the government agencies, and we do not only just an online educations, but we go to each areas of the cities and the provincial all over Indonesia to bring around people to educate what's the benefit of this fintech and how it can help improve your life, how it can really help to grow your business and make sure that they can have a financial healthiness.
Well, thank you. Thank you, Vince. Now onto the floor. Do we have any questions for the panelists? So while we wait for your question, I have a question for all of you.
Sure.
Now, how is fintech growth impacting very average individual like myself? How is the consumer experience with financial services changing, or is it changing at all? Shall we start with you, Brian?
Yeah, I think Vincent's probably the best place to talk about consumer, right? Because he really target the lower income and more vulnerable population that are currently underserved, right? So, but I want to talk a little bit about the small medium enterprise sector, right, which is vital for any economy in all the jurisdictions. But there is a persistent gap in SME financing, right? Both in terms of credit, but also in terms of debt as well. So what we're seeing after our research, both in Europe, in Latin America, in Asia, is that fintech and digital financial services can really widen the access for small, medium enterprises, right? By offering them a alternative channel to raise capital, to accept a loan, because of a lot of the smaller firms, they are either have a shorter trading history, right? Have a lower headcounts, but some of them does not fall into the standard borrower profile, right, that is most conducive for bank to make a credit decision. So we see a lot of fintechs around the world using different formats of data, right, from social media data, psychometric data, biometric data, even the UBS and FedEx tracking, right, in terms of the packages, right, that the merchants or manufacturers send to make robust, accurate, and timely credit decision. They also offer, different product or services such as invoice trading or invoice factoring, right, which is really important to solve the issue of working capital for small, medium enterprises. And from our data, we see especially the micro business, a smaller business who only, asking for $20,000 dollars or pounds loans, right? So that's the segment that fintech is making a huge impact globally.
Thank you, Brian. Governor?
Yeah, thank you. One, I subscribe to what he has said, so I won't have to repeat that. I think one of the key things that comes with fintech is the conveniency, and that financial transactions are being done. So one, it's not just the convenience, the comfort of doing everything at your desk, but also it saves you time that would take to move to a financial institution. And that time, as we always said, time is money. So you continue doing other things as you just do a financial transaction within seconds. So that's one. Two, adding to what my colleague said on SMEs, it also helps today to easily build a credit history of small and medium enterprises. So it's these were perceived to be highly risky, and the reason why they always find it difficult to mobilize financing. But with fintech, they're able to build a credit history, and they're easily trusted by financial institutions. Of course, there's also easy channels of mobilizing financing, like a crowd funding that is already happening. And the other thing is when we talk of access to financial services, most of these people are really excluded, and today they are able to access financial services. And for example, back home we have this like a payment solution, a merchant code that is given to traders. But now the fintech has built solutions around that, so the traders are able to do simple accounting of their transactions, their inventory. So that helps them again to manage their businesses better. So there's a lot really that has come with fintech that has impacted people's lives. And I would say when you look at what comes every day, I think the future holds even much better opportunities. Thank you.
Thank you, Governor. Drew?
So I would obviously echo everything that's been said thus far. I think if I were to just maybe summarize and add a little bit of a nuance to it, I would say that ultimately we want financial services to work for us in the time of need without having to think about them. So this convenience factor, really just making sure that financial services more or less are seamless. So you don't have to think about them. It's also a bit safer too. So if you were previously having to travel quite far, be it if you're a small business or an individual, it's definitely not safe to be always carrying cash. So it's really nice to be able to do that digitally. And then I think maybe if I were to say one more thing, just in terms of creating that digital footprint, it really does offer additional opportunities to prove your creditworthiness and then to expand products and services available to you, as Vince mentioned earlier.
Thank you, Drew. Vince?
Yeah. So I think the benefit of the fintech, it's so much clearer for the user's point of view, right? And more we've seen it that the ability for them to not only like leave a digital footprint, the ability for them to transact more and more on this ecosystem, then what happened is more and more companies now started to innovate more on what kind of product and services that they can offer them. Because previously, if you want to have certain product, for example, if you have lending, you have a minimum amount of lending that you can do. For example, like there is a amount that you can borrow. It has to be minimum for any of the lenders to be reasonably economically justifiable. For example, if you have insurance, then the terms of the insurance and the policy need to be a certain way for you to be able to serve the customers. And investment, for example, as well. The barrier of entry started to be very high before the fintech. And now, because of this, so you can start everything with micro transactions, micro lending, micro investment, micro insurance. So then more and more people can feel the benefit first, and then they can try with a smaller amount. And then once they get used to it, then they can start to increase more and more of their transactions value and volume. So that overall will give a healthier journey for them to bring from the very, what we call early financial inclusion stage, or some of them even never had a financial access before, to eventually a much more sophisticated individuals or sophisticated SMEs. As I mentioned before, right? Some of the SMEs have benefited with over 900% of sales increase just because they got onboarded this digital ecosystem. Now, because they can transact more, then they have more data on available through their transactions digitally. Now they can also start to have working capital, and now then they can start to increase their businesses as well, and then they can start offering more and more. So the way we see it, this digital financial services are accelerating what we could have done prior to this. So eventually, when we see the futures, and if more and more people are engaged in this digital ecosystem, so our economy in Indonesia or in anywhere else will accelerate even faster. So that's the hope for this.
Thank you.
Thanks.
I believe we're coming to the close of this press conference. Thank you, and to those who are in the room physically, and all of you who are watching us online or listening to us online, and to the panelists for the insights. Brian, Governor, Drew, and Vince. Wishing you a wonderful morning, afternoon, and the evening. Goodbye.